Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is June 25th, 2015. Doing another Google Hangout with you guys. It's been a little bit of time since I did the last one, but as always, I want to get back on a consistent routine. So I have some plans in the future for better utilizing this great feature that allows me to be able to talk to you guys as traders and to be able to conquer these markets together. So 2 days of selling. I mean, it's like, what the heck has gotten into the market, man? Maybe 2 days of selling. The market's trying to rally here in the final hour of trading. But so far, though, we're trading below the 50-day moving average today. We broke that. We broke the 10-day moving average. We broke the 20-day moving average for a short period of time. And I think the 20-day moving average is probably the more important of the MAs as of late. It's the middle band on the Bollinger Band that most people use. And so, yeah, I think if you get down below the 20-day moving average, I think there's a strong possibility we see it forward. There is some support that that you have to be cognizant of with this market. First off, you have this trend line going off of the March lows and just steadily progressing higher. We tried to break it twice earlier this month to no avail for the bears. So if it was to, let's say, hit it tomorrow, that trend line would be sitting right there at 2084. So it need to break 2084. There's also a little bit of a support level below it. I don't know if it's really all that much of a strong support level, but you can see multiple times where the market has bounced off of it. On an intraday basis, it might dip below it, but on a closing basis, it tends to remain well above it. So that particular level to watch, or at least for a close below, would be 2079, and then ultimately you got 2072, and I think that's the biggest part. 2072 has been tested multiple times. It's held, and particularly this month, it's been a bit of a gasser for the market to get below. So break 2072, and I think this market will probably see a lot more selling that could take it into the lower 2000s, and maybe see something like 2030s or 2040s before there's any kind of bounce thereafter. So one of the questions I got in the Share Planner Splash Zone today was about the market and why have we not seen that much movement from the stock market and from the market in general. So the biggest thing, you have quantitative easing going on in Europe. That plays a big role in it because that's where you look at our effect on the European markets when quantitative easing was going on. It had a similar effect. So that's going to be one of your big reasons right there. When quantitative easing stops for Europe, you'll start seeing a little bit of a market improvement. In terms of intraday movements and trends being defined by the stock market. Right now, they've got that going on, but that doesn't mean that we can't get any breakdowns or breakouts here, because we very well can. And the other thing too is that there's a good chance that this is a topping pattern that's being formed, and these topping patterns can be painful. But once they break hard and they break fast, and it provides some excellent short opportunities. And I've been highlighting in my trading plans each morning that there is like a head and shoulders pattern out there that we have to be very well aware of. It's very choppy, but that, quite honestly, that defines the year that the market has had so far. But right here you have your left shoulder, okay, and then you have your head, so it goes higher than the left shoulder. And then I thought maybe this was going to be the right shoulder. It was just going to be a small one, which sometimes the right shoulders are really small compared to the left shoulders. But instead, it faked us out there and just continued to move higher. So right now you could be having the peak of a right shoulder, which would be perfectly symmetrical with the left shoulder. So there's a very good chance that we're seeing a head and shoulders pattern play out here. And in order for it to confirm, it would need to break below this 2072 level. So very possible. Right now, the market's only what is that, like 33 points away from breaking that mark. So. And then, of course, the other thing too is people are sitting on pins and needles with this whole Greek situation, and Greece and their debt problems. It's been going on for like 5 years now, and there's been no resolution to it. It's definitely hitting a fervor right now as they're asking for more money so that they can pay back the debt that they already owe, which really doesn't make too much sense. But nonetheless, they're trying to kick the can down the road. Greece's government's being very stubborn about the VAT tax increase and then the pension cuts. So that's really the holdup right now between a deal being struck. So we're heading into a weekend here after tomorrow. Does something get struck over the weekend like we saw this past Monday, and all of a sudden the markets rally again? Or are we simply looking at a further decay between the relations of Greece and the European Union and like Germany and all those characters? That remains to be seen. So for now, I am 20% short on this market. I got into SDS yesterday. And obviously this is a 2x bear of the S&P 500. I mean, so far so good. I mean, you got, a double bottom. I'm not really huge on doing technical analysis directly on these leveraged ETFs. Instead, I like to go back because there is a time decay. That's why the chart looks a little bit different. But nonetheless, there's a range bound mindset in this market to where when you get to the extremes, you fade the market's move. So, taking SDS yesterday, once this move started to unfold, gave us about 1% yesterday and has given us some gains today, not a ton, but about 0.4% in addition to yesterday's gains. So SDS is something that I think that could easily get, if this market continues to sell off tomorrow and into next week, we could be looking at, maybe a sell price of around $21, which would be about a 5% gain for that ETF trade. The other trade that I added, and this was just, a couple hours ago, was CA, technology software company. You can see there's heavy distribution here. This is just tons of distribution. It breaks through this support level that you can see there, breaks through it with authority. And then, which isn't all that surprising, it breaks back up towards that resistance level. If you look there, it got right at that resistance level and it started failing yesterday. So once it starts failing, that's when I wanted to reshort. That's when I got in today. So far, so good, up about 0.5% on this trade. But yeah, CA, this is a stock that, it has the potential to hit like a $28, maybe mid 27s before it really bottoms out here. I usually on my short trades, I go for like 4 to 6% gains. So if I can get out at 28 or even like 29 in this case, I mean, I'll be thrilled with the gains and move on. Because one thing you got to be really careful of in markets where you find yourself shorting stocks is the snapback rally. A lot of people refer to it as dip buying, and it has been very prevalent over the years where stocks, when they're hitting any kind of turmoil or anything else, suddenly just rallies out of the blue. And the greater the sell-off, the greater the dead cat bounce is going to be. So you always have to play. Personally, I don't want to play the dead cat bounce. I don't want to hold a stock through a dead cat bounce if I don't have to. If I do, so be it. But if I can avoid it, that's great. So, when we look back at, and I've traded SDS quite a bit this month, and for the most part, it's been a very profitable trade for me. But like when we hit this point right here on Monday, June 15th, I came into that day short, or short the S&P, but by using a long position in SDS. When this happened right here, when we were unable to bounce off of that 2072 level and we started moving higher, by the close I went ahead and sold my position in SDS because it wasn't boding well for the market the following week, or for that week when you have that sharp of a bounce off of support. So when that happened, and the same thing again here. I mean, look at this. I mean, you're getting a little bit of a bounce off of, and then the real bounce happens like the following day. So when you get these kind of signals at key support levels, that's not a time to say, oh, well, let's see if it continues tomorrow. No, when you get that in this kind of market where we have seen just so much channeling, just go ahead and sell your position, close it out, and let the bounce play out. So that's what I've had to do. Earlier this week, I was in a stock with Foot Locker, got out a couple of days ago. It's still going up a little bit here, but nonetheless, I have to be cognizant of the range that this market's trying to trade in. And Foot Locker also, or Nike, reports earnings after the bell today, which no doubt will probably weigh on Foot Locker as a result. But that's my way of trading the S&P 500 right now. If I'm holding this stock and let's say we get all the way down to 2072, am I going to cover it, or am I going to close out the SDS position that represents a short on the S&P 500? No. What I'll do, because what happens is intraday we may break that, and let's say we see a little bit of a watershed moment and we close at 2065. I'm probably going to hold my position right there because we're not really at a support level. The market's still selling off, etc. Now, if we get down to the support level here and we start intraday seeing a little tick back up where it looks like the buyers are trying to come back in and buy this dip, all right, I'm going to go ahead and sell out just like I did back on the 15th of this month. So that's really the approach I'm having to trading. It's a hard market, guys. No matter how you play this market, it is a hard market. And you know, a lot of people lose fortunes in this kind of a market. It's not the bear markets that tend to wipe out traders, and it's usually not the bull markets either, for obvious reasons. It's usually these sideways markets where traders become very undisciplined, where they get frustrated. They don't feel like that they're getting the gains that they've become accustomed to over the years, you know, especially like in this current situation where from 2009 through 2014, the market was just rallying like crazy. Then you hit a wall in 2015 and traders starting to get frustrated. And they start, you know, questioning themselves. They start ignoring stop losses because they see this rapid up, down movement in the stocks where they tell themselves, man, if I would have just held on, I could have made a killing in that stock. So they start ignoring it because they're seeing this, you know, range bound price action. And then, you know, by ignoring stop losses, you set yourself up for disaster because there's going to be some stocks that simply don't stay range bound in these markets, and you're going to get slaughtered by ignoring those stops. So range bound markets of any time in the stock market to be very, very cautious and to adhere to your risk principles. Range bound markets are the time to do it, okay, more than any other market. So don't let this market frustrate you. It'll soon pass, I can assure you. Now, with that out of the way, let's look at some trade setups. So we talked about CA already. We already talked about SDS. Let's look at OI. This is one that's definitely on my radar today, one that I'm watching with great interest. Excuse me. I've been looking at this one, particularly at this 2373 level where it's currently at. You can see it's kind of at that point where it's breaking below a key support level. What makes me a little bit nervous about it is I want to see a little bit more continuation out of it, perhaps tomorrow. Let's see if the selling can continue. If so, there's a great risk reward setup here where you can you know, for about a 2.5% risk, you had the chance of, you know, seeing a stock drop down into the mid 22s and make a decent profit off of it, you know, about 5%. So it's a 2-to-1 trade on this short setup here. But and it also has a little bit of a head and shoulders type look to it. So if you have your left shoulder, your big old gapping head here, and then your right shoulder, it's pretty much on the verge of confirming right now. So I do like OI a lot. That was probably my second favorite trade coming into today, and probably my first trade going into tomorrow. PH, nice little bear flag over the last couple of weeks there, but you can see if you back up the chart a little bit, you can see there's on the weekly a bit of a distribution phase going on here with the stock. Then back on the daily, you can see where if this bear flag can confirm and go through like this 117 level, I think you'll see the momentum pick up to the downside and maybe even see a move back down to 115 initially, and perhaps even 110. Then you have APD. So yeah, we're looking at some short setups here, folks. The 200-day moving average has been taken out the last 2 days, or actually just today. It closed just above it yesterday. But nonetheless, I mean, you know, more distribution here. This is not a trending stock pattern here. This is not an uptrend. This is not even really a downtrend. It's a stock that's basically seeing a lot of people after a significant rally higher where it was below the 100s all the way up to 142. It's starting to see some people taking profits and some MAs that haven't been tested in the past being tested now, and I this is another one that I really like a lot. So I think you could play this one with a stop loss above 147.73. Then you got ABT. Once again, more distribution here. Does that mean it can't bounce? Sure, it could bounce here, but if it gets back below, this 42.50 level or so, I think the next stop for it is going to be around 40.75. If that breaks, I don't know. I think all bets are off at that point. So, but yeah, a really, really good chart pattern there to keep an eye on. So with 2 days of selling, what are we really looking for in stocks to the long side? We're looking for stocks that are really not bowing the knee to the market pressure of the past 2 days. So first one, FFIV. Yeah, it's taken a little bit of a beating yesterday, but look at the bounce back today, and look how it's already setting up for a possible breakout above 128. Definitely a trade you want to keep an eye on. You can play with a pretty tight risk. I'd say if you can handle a stop loss of below 123.50, I think that's a really good setup for some that might be a little bit too much. But definitely a really nice setup if this market does indeed bounce tomorrow. EXPR, quick short-term breakout. This one is either going to work right away or it's not going to work out. But if it breaks above the 1892 level, try to get long on it. If it head fakes you the same day, go ahead and get out. And then TWX Time Warner. Nice chart here, man. It's got some definite resistance here, but if it breaks above this resistance level here, which is right around 88.90, breaks out above that, sure, we might be able to see a move higher in that name as well. So I like these clear support resistance levels that I'm pointing out here. They do mean a lot when it comes to trading. They're psychological levels that you have to pay attention to, and to go from there. Well, that's going to do it for today. If you guys have any questions, feel free to hit me up in the SharePoint Splash Zone. I am there every day, providing my real-time swing trade alerts and answering questions, providing trade ideas. So yeah, if you have any questions, feel free to hit me up there. Or if you're not a member of that, definitely consider it. You can go to shareplanner.com/splash zone for more information and see what it is that I have to offer you, and whether or not it's something that works well for you as a trader. Or you can just email me at ryan@sharepointer.com, and I'd be glad to take any of your questions there as well. So we're approaching the weekend here, about 30 minutes left of trading today. Take care, enjoy some time with family, and God bless.